Hello, everyone. Welcome. My name is John Harkins. I'm the Events Associate for the French American Chamber of Commerce New York chapter, and we are happy to welcome you to our webinar focused on providing updated PPP information. Just a quick word about our organization before we begin. The French American Chamber of Commerce's mission is to provide the opportunities, experiences, and understanding that empower successful business relationships between and for members. The FACC New York chapter counts a mosaic of 1,000 members representing sectors from tech to food, finance, and other professional services. These members have complimentary access to digital events featuring top industry experts and leaders, as well as personalized member-to-member introductions, and of course, access to the FACC member directory. Now, this webinar will last about an hour with around 50 minutes of presentation and then some time left at the end for questions and answers. As always, this presentation will be recorded and available to attendees after the fact, so don't worry about missing a thing. Now, to briefly just get into things, following the recent federal renewal of the Payroll Protection Program on April 24th, this webinar will be presenting a full update and what it means for businesses looking to take advantage of the program. I will let the speakers introduce themselves more fully, but Benjamin Gadon and John Lieberman will provide updated information on loan/grant eligibility, the specifics behind how much an entity may receive from the updated program, the use of the received funds as it pertains to loan forgiveness, future bank requirements and audits, and the potential consequences attached to the program. I don't want to keep giving any more away, so I now hand it off to Ben and we can get started. Ben?
Good morning, everyone, or good afternoon. So my name is Ben Gadon. I am a CPA. I am a partner at Perelson Weiner, which I joined very recently, in fact, just as the quarantine was setting in. And so as a result of joining so recently and most people working from home, I've had the opportunity to go through the new tax laws and the new SBA loans and get into depth in terms of disseminating information to my colleagues, my partners, as well as to clients in terms of who's eligible and how the loans are forgiven. And John, you want to introduce yourself as well?
Ben, can you hear John?
No.
John, I don't think we can hear you. Ben, while John gets his mic set up, would you mind just giving us an introduction into the firm?
So let me go back. Perelson Weiner is a certified public accounting firm. We offer consulting and comprehensive business strategies, tax services, as well as individual high net worth individual planning, succession planning, and forensic accounting. So we work very closely with our clients. They tend to be high net worth individuals or closely held businesses owned by those individuals. And we try to integrate our practice both with respect to their business needs as well as their personal needs. So that's a background for the company. I think I gave you my background already. John, are you there? So anyway, John Lieberman is my colleague, and he's been doing this for over 25 years. And he's made many presentations to many groups. I hope we'll hear from him shortly. But in any event, he is well suited to work in terms of interpreting the law and making presentations. I think he speaks French fluently, and he has a background as a tennis player and has actually worked with many tennis professionals, including French Open players, so he still avidly follows that group. So in any event, let me get to the, I just wanted to start by talking about government relief during these hard times. And I looked into, the first thing I wanted to do is see, well, what's happening, what are the French doing? Because they've been suffering from the COVID situation along with the rest of the world. How have they coped with their businesses, their employees, et cetera? So in France, as opposed to here, most of the employees are they're not employees at will, meaning that the businesses are obligated to maintain the employees Even if they leave, they have garden leaves, and the government, it requires that of the businesses. Here and in most states in the United States, such as New York, people are employees at will, meaning that they can only the company can fire them at any time for no reason absent described discrimination. So basically, here in the United States, people can collect unemployment, but the government realized that that's not sufficient to maintain the businesses. As you know, a lot of businesses have shut down, either mandated by the government or they're not considered essential businesses, so they've been forced to shut down with no revenue coming in necessarily to support their staff. And rather than lay off those people, for them to go and collect unemployment, which has been enhanced by the federal government with an additional $600 a week through, I believe, through the end of the year for people unemployed. They also issued a program to allow small businesses to sustain themselves, and that's called the Payroll Protection Program, which is the focus of our discussion today. And the Payroll Protection Program, they're offering loans to companies. We'll go into the qualifications, which can turn into grants, forgiveness of the loan. And so basically they're subsidizing the company to continue paying their employees and other fixed costs that they have during an 8-week period that the government expects them to be down as a result of the coronavirus. At the same time as they issued the Paycheck Protection Program, they also issued various payroll and income tax payment deferrals and tax recovery benefits, which were not in the laws prior to this.
Ben, before we just keep going, I'd like to just see if we can hear John. John, would you mind?
Can you hear? Yeah, I dialed in. Can you hear
Fantastic.
me now?
Yeah, we can hear you perfectly. Great. Continue on, Ben. Sorry.
Okay, so the Paycheck Protection Program, which has been coined PPP, it's a loan grant program, as we discussed, and it provides small businesses with up to $10 million of low interest loans that will allow them to sustain their business. If you use them appropriately, which is to pay employees and pay other fixed costs, the loan can be forgiven tax-free. Now, question, I highlight tax-free in red because just last night as I was completing my slide presentation, the IRS came out and said that even though the loan forgiveness is tax-free, the expenses that you use, that you apply the loan to get the tax-free forgiveness are not tax deductible. So we can get into that in a minute, but it's a prime example of the uncertainty that surrounds these loans and their forgiveness. And at the moment, what we want to do is update you on eligibility, how you calculate the amount of loan that you're eligible for, use of the funds, and how you get forgiveness, bank requirements and record keeping. And we also want to get into the consequences of using the program, which continue to change. So first of all, as I mentioned, the breaking news last night is the IRS released a notice saying that they're disallowing the deduction of payroll and other expenses paid with PPP loan money that is ultimately forgiven. So that means even though Congress said, well, we're going to forgive this money tax-free, the IRS is taking that back by saying that the expenses, because the forgiveness is tax-free, the expenses should not be deductible. So, there's a question as to whether that's going to be the last word from the IRS. It came down as pretty shocking to a lot of people because they were under the impression that if I get $1 million and I use it to pay my employees and my other fixed costs, that are eligible, I'm home free. I get to keep that $1 million in my pocket, tax free, meaning I don't have to pick up the income. But now all of a sudden they're saying, well, the expenses are not deductible. So this just came out last night, and I suspect there'll be a big debate within the government as to who authorized this release, and how this doesn't reconcile to what Congress said in the law itself. So as far as the terms of the loan, I think I want to mention that they're guaranteed by the U.S. government. So in other words, if you're worried about, what happens if I default? What happens if I go out of business? Or if the bank is worried about that, well, these loans are guaranteed by the U.S. government. So, the idea.
So Ben, I'm going to jump in here. That's true that they're guaranteed by the U.S. government, but they're issued to the companies / to the individuals. And the bottom line is that you do have certain responsibilities of repaying and doing certain things, which we'll discuss later on. So it is that from the bank's point of view, they're guaranteed, but from the individual's point of view, they still have responsibilities to the Small Business Administration.
Correct. So the other thing is there's no application or underwriting fees. The government will pay the lender, the banks. I think it's a commission below $500,000. It's a commission of 3%, John, or is it 5%?
I believe it's 5% of all loans under $350,000, and then it's a graduated schedule up to the $10 million, which may only be 1% at that point, but
Right.
That's still substantial from the bank's bottom line to cover these costs.
So they're encouraging the banks to hand out this money and give it. You can apply through your bank online. The first tranche, there was a lot of controversy about it because while the loan program is first come, first serve, obviously the larger borrowers who are applying, they have the resources, they have the connections in the bank to have gotten their applications in first. I think we read about this with a lot of large restaurants and some public companies that use the money, and they got their loans, and meanwhile all the smaller businesses were standing in line waiting to hear from the bank, and then all of a sudden they find out that the money ran out. So the government has changed some of these public companies and some household names into returning the money, but they've also, when they issued the other tranche, the first tranche was $250 billion, the next tranche was $310 billion. They've issued more guidelines as to how the money should be distributed and who should, how to put people so that the smaller borrowers are eligible, which is what this is intended for in the first place. So it's favorable borrowing in any event. There's a 2-year payback, and the interest rate is 1%. And the interest and principal are not payable until the first 6 months after the loan, assuming that you don't have forgiveness on it. So the next thing is, who are eligible businesses? So we have small businesses, nonprofits. It's not just for-profit businesses. I know a lot of churches and synagogues that have applied for these loans. They certainly have an issue at this point because there's no revenue coming in. They will not be getting their dues and contributions as they normally would. Tribal business concerns of veteran organizations that have less than 500 employees or the applicable size standard by the SBA. So, you can have more than 500 employees and still qualify. There's a table that's listed in the Small Business Administration by NAICS code, which tells you what's the qualification size for a small business under them. I took a look at it. For example, if you're a manufacturer of military tanks, for example, you're a small business if you have up to 1,000 employees. If you're a mattress manufacturer, you're also a small business if you have up to 1,000 employees. If you are a manufacturer of surgical supplies, you can have up to 750 employees and still be considered a small business. Okay. It also applies to sole proprietors and self-employed individuals or independent contractors, so as not to leave out self-employed individuals who are working for themselves. The government has also allowed those people to qualify. I'm not going to discuss that in detail today because I'm focused more on the corporations and the larger businesses, but if you're a sole proprietor, you would have to complete your Schedule C for 2019, even if you haven't filed your return, and you'd have to look at the bottom line, line 31, and to that extent, that amount is the basis for calculating how much you're entitled to. And we'll get into the additional qualifications in a minute. And you have had to have been in business February 15th of 2020. So if you go into business now, this is not a loan for you. This is designed to support people who are already in business and are facing consequences and uncertainty as to how the business is going to continue. Okay, we mentioned over 500 employees that you can qualify. A business can qualify based on the revenue. Here's the website for that to look up the table, and there's also alternative size standards for all small business loans, which you can qualify under if your maximum tangible net worth is not more than 15 million and your average net income for the last 2 years is not more than 5 million. But I think most of the businesses are going to qualify based on the 500 employee standard. So there are certain businesses who are not eligible. And first of all, at first people were saying, well, I have household help. Can that qualify? I'm paying payroll taxes on them, but they specifically said household employees are not eligible. Some household employees may be working from home, but they're not going to qualify, for the employer to subsidize them. They probably could collect unemployment, and they also are eligible if they paid their taxes. They're eligible if they're under the limit. They're eligible for the $1,200 per person, government back to business subsidization of individuals. So if a business had criminal activity within the last 5 years, meaning a 20% owner, or greater than 20% owner, is either indicted or has been in jail or faced some criminal activity, they don't qualify for these loans. And if the business defaulted on an SBA or other government loan in the past 7 years, they're not eligible to apply.
So Ben, are there any industries that are outside of the scope of the eligibility? They may be legal on the state level, but may not be legal on the federal.
Thank you for mentioning that. And the first one that comes to mind is the cannabis industry, which has erupted over the last few years, has quite a few employees. Obviously, their distribution has been severely curtailed, just like everybody else's. So the revenue may not be coming in, but they're not legal under federal law, and therefore they don't qualify for these SBA loan forgiveness program. Okay, companies can be U.S. or foreign owned. There was some concern up front that if I'm foreign owned, if I'm a French owned company, can I qualify? And the answer is absolutely. They're looking to subsidize the business to continue paying their employees. As long as the employees are U.S. employees, there's no prevention from a French-owned company, either in whole or in part, from being able to participate as long as they meet the other eligibility requirements, such as that they have less than 500 employees or they meet the tables within the SBA business industry codes. And
so before we move on, I'm just going to go over a couple examples. We had several rejections of my clients or the firm's clients for the eligibility from the loan from the banks. And what came up was the majority of the business in the U.S. So if you have a sales office here with a couple of employees, we can use the aerospace industry. The production is in France. The sales may be in the U.S., but they're worldwide. They may not be eligible because the majority of their business is not in the U.S. So we got some pushback from several of the banks. We actually spoke to people internally there. Certain companies were able to get through, but unless we could show that they were doing a majority of their business, and that would be majority worldwide, they did not qualify, even though they seemed to be eligible and they had employees. So the devil's in the details, and depending on which banks you are working with.
Okay. And also, it doesn't extend to employees whose permanent principal place of business is overseas. Meaning, I think what they're targeting here is if the U.S. company has employees in France or somewhere else, and they're living there year-round, they're not eligible. They don't count towards the loan participation. So you're looking at U.S. employees, and that doesn't matter whether they're French nationals or U.S. nationals. So a French national working here in a U.S. business would qualify, but a U.S. national who's working in France would not qualify towards the loan forgiveness. Presumably, they're getting relief under whatever laws work in that country. There's also a test for related parties. So if you have multiple entities, and in total related parties, you have more than 500 employees, generally you're not going to be eligible for this loan. But there are exceptions for the NICS Code 72, which is restaurants and franchise businesses. So here they're saying the restaurant industry in particular, you may have 500 locations, you may have more than 500 employees collectively, but you're still eligible for the loan because they're looking at each individual place. And if you think about it, restaurants have been extremely hard hit. So there was the big story about Shake Shack, which is a fairly big company. It may not be public, but they applied for the loan because they don't have more than 500 employees in any given restaurant, even though collectively they have more than 500. And they qualified for the maximum loan of $10 million. Now, a week later, they were able to get private financing, and the PR from them being a small business and using this program, the appearance appeared so bad that even before anyone shamed them, they voluntarily came out and returned the money. You had another situation with a not-for-profit like Harvard, where they took the loan for a certain piece of their business, and they were shamed because they have an endowment of more than of billions of dollars, and so they returned the loan. So there's public companies which may qualify, but the SEC and the government has come down hard and said that they're not, they really are not what this was intended for, even though they meet the technical definitions. And just the other day, and we'll get into that a little bit more, the Secretary of the Treasury said, anybody who gets a loan over $2 million, we're going to audit them and see if they really had the need for the loan, and whether they used it appropriately, etc. So that's
so Ben, I'm going to jump in again. I know of a situation where it's a French entity that raised several $1 million. They're doing drug development. They made the decision to fund a U.S. corporation, which they own. The majority of the business is in the United States. They have 5 or 6 people on the payroll here. The revenue, which is non-existent, which is one of the definitions of eligibility, but the payroll is probably 95% of their actually operating costs worldwide. You may not have to look toward the revenue to see if you're eligible as a foreign corporation owning a U.S. subsidiary. Again, looking at it from a definition point of view, it's important to look at things not just in the straight line relative to revenue, but it could be just where your expenses are located as well. So just a further note about eligibility.
Okay. So next slide, all entities can apply. Corporations, including S-corps, partnerships, also LLCs that are taxed as partnerships, and sole proprietors with or without employees. So you have a whole gamut of entities that can apply for the loan. Obviously, not-for-profits, those are typically corporations, but they can apply as well. So the next thing is, what's the maximum amount of the loan? So the maximum amount of the loan is, typically you'll look at your 2019 payroll. You have to identify each of the employees, and each employee is limited to a maximum of $100,000. So, you know, the CEO who may be paid $300,000, only $100,000 of his salary would qualify, and you're going to divide that by 12. That's the average pay per year, and you're going to multiply that by 2.5 times, and that's the amount of the loan up to $10 million. For new businesses, the measurement period would be January 1st to February 19th. So as far as the definition of wages, wages include tips, commissions, vacation, parental, family, and medical, sick leave, not including the medical sick leave that was provided in the first COVID Relief Act, which is paying companies for up to 2 weeks, is providing companies separately a subsidy of up to 2 weeks for paid family and additional leave in certain situations. So you can't count that because you've already gotten the benefits, but any other family leave that you provide your employees can be counted. So the best place to look is on your 941s and W-2s, and that's typically would be the gross wages plus, excuse me, any 401k that they deducted from that. So you have to take the taxable wages and add on to that any non-tax benefits, such as, you know, reductions for 401k contributions or employee share of medical expenses that are not taxable. That's the gross compensation. In addition to that, you can add into your qualifications any employer-provided payments for retirement plans. So if the employer matches the 401k, they can add that in. And that's not subject to the $100,000 pay limit. That's in addition to all of your pay up to $100,000, and they can add that in. Group insurance premiums, state or local is tax assessed. For example, New York State has a tax on, you know, they have an MCTD tax, which is a Metropolitan Commuter Transportation tax on employees working within the metro area. You know, small amounts sometimes, but group insurance premiums may qualify, and also any health care benefits that are provided by the employer. And that's a fairly sizable amount because employers are typically paying the bulk of the medical insurance, less whatever the employee is obligated to contribute, but that's a significant amount, and that's not part of the 100,000, but it's part of your loan qualification and also potentially part of your loan forgiveness. So the next thing is, here's a typical questionnaire in terms of a bank application. Notice the first line: are you willing and able to provide a good faith certification that this loan is necessary because of economic uncertainty caused by COVID-19 and will be applied to maintain payroll and make required payments? We'll get into the meaning of that economic uncertainty a little bit later, but keep that in mind, because that's very important in terms of making sure that you qualify. Do you have more than 500 employees? No. Enter the expected date of the loan. Well, it's now May 1st. You have up till June 30th to apply for this loan. What's the total payroll costs? So you have to go back and you have to calculate all these things we just discussed. Pull out your 941s, pull out your medical contributions, pull out your retirement matching, etc. And do you have any employees that earn more than 100,000 a year? You have to limit that. And were they receiving any qualified leave wages under the Family First? Well, if the answer is yes, you have to identify that amount and make sure it's not in your calculation. And then they ask, were any of the employees non-U.S. residents? I think that may be a trick question, because it's really not whether they were non-U.S. residents. It means were they, is their principal place of business overseas, whether they're a U.S. resident or citizen or not. So now we want to get into loan forgiveness. I'll let John take over a little bit.
Okay, so Ben, you will continue handling the slides. Just for a correction, I went to French public school many, many years ago. My ability to speak French is limited to about 23 words and asking for directions. So, and I lived in the 15th arrondissement. But let's go on to the terms of forgiveness. Basically, you see it on the screenshot right now. Basically, you have your payroll costs, what they call interest on mortgage or rent, if you own the building, and there's some issues concerning that, and the utility payments that are included. And utilities are usually considered electric, gas, water, and now the question is whether or not internet access and other related expenses would be part of that. We're taking certain positions and understand that a lot of the items right now concerning loan forgiveness is our interpretation, not what has actually been determined. Things will be changing throughout the course of the next few weeks or months, as yesterday occurred that they decided to announce a regulation showing that the IRS interpretation that the expenses will no longer be deductible and the loan being forgiven, that they're offsetting. So everything is as of this time, and everything is as what we have written down here, but most of the commentary right now will be interpretation. All right. So as you can see, you have your payroll. Go ahead.
The focus has been more on the qualifications for getting the loan. Since people have time to apply for forgiveness, they're still trying to get the loans out there and clarify what they meant initially in terms of who qualifies. So this is going to come a little bit later, but we're presenting you what we know as of now. And keep in mind, it's fluid.
Okay. So we've been in contact with people involved with the SBA. We've had some very interesting questions, such as if you have an employee, all right, and what it says in the commentary is that you have to have the employee at a minimum cannot cut the payroll less by more than 25%. So if you cut an individual that was making $100,000, we'll use that as a round number, and now you're going to pay them $74,000, that person's salary will no longer be eligible for the loan forgiveness. Now, an example that I was asked by one of my clients was, okay, I had someone who passed away. I can only replace them with somebody less than the amount, or even better, someone else asked the question about, can I put a family member on the payroll who's quote unquote qualified for that position? And according to the communication with the people that we know, they said if it's below 75%, it is not part of the loan forgiveness. Number two, however, that person that you hire will be part of the count. So tracking your payroll, the people that you're hiring, the people you're trying to hire back, you need to be able to stay on top of this. Another example is that someone is now collecting unemployment, and with the benefits is actually getting paid more being unemployed than you would be paying them. So I think that you need to be able to go out to that employee, former employee, and say, I'm not coming back, which presents a problem for the employee because under unemployment, if they get asked back to their job, they're supposed to take it. So again, each individual situation with each entity, you have to be very careful with what you're doing relative to the payroll. So as you can see from the slide, you have the level of payroll, and the other question is what's considered a full-time employee? It's 30 hours or more. Okay. And now there's the exemption for rehires, and again, tracking who you had, the number of people in these time periods, and the wage reductions are going to play into this. However, the repayment is going to be based on your loan. Say it's $100,000 that you receive, $75,000 has to go to salary, and 25% can go up to 25% to overhead, which is rent, utilities, telephone, as per the prior screenshot. However, you're going to have to be able to watch and manage, again, the number of equivalents and who's getting paid for what type of work. I was with one of the banks today. I asked them directly how are they going to do the audit, so to speak, because they're going to be responsible. We don't know what date it is. We've heard that by November that you're going to have to submit your paperwork. We have here an example of a slide that we put together to track this. There's two parts of it, so that it will be the lead sheet, but this is the time to start making sure that you have all your paperwork and start preparing it for that submission to the bank. I think there's another slide, Ben, right after this. Yes. There you go. So you have, here's your list. It basically covers everything that we've discussed. This flows back up to that master spreadsheet, and behind that we will have our ADP reports, bank statements, and other supporting documentation. Now, one last thing. A couple slides ago, there was the issue of the certification about economic impact. This is, again, is the time to discuss different things and not wait to the last minute. You need an explanation. Your industry, you have problems. We have some people that their cash flow for May and June will be terrific because they get paid in 90 to 120 days, and their last shipments were at the end of February. But when July and August comes around, there's going to be no cash left because they haven't been able to ship products. So delineating economic impact, uncertainty, and tracking these type of things that where you may not have a decrease in revenue immediately, you may have a decrease in revenue in July, August, and September. So that is economic uncertainty. Each industry will have its own thing. So again, this is the time to start thinking about what you're going to write, how are you going to write it, and be in tune with what the bank will be requesting. I
So,
think that covers that.
and we'll cover it a little bit more at the very end, and I want to move quickly because I know that people have questions. I just wanted to mention also that, first of all, some people are questioning, can I pay out bonuses? Can I pay out bonuses from the prior year that I may not have paid? Does that count towards the payroll as long as you pay them under 100,000 on an annualized basis? I mean, it's not even clear that you can. That do you have to pay that? Can you pay them up to 100,000, or does it have to be a prorated amount? All of these questions come into, we don't know the real answers yet. We can only speculate. So I think that that's good to keep in mind. And the other thing to keep in mind is there's no mention. If you want to expand your workforce, let's say, you're pleasantly surprised that all of a sudden, you're doing more business than you thought. You have an online business. As long as when you took out the loan, you had uncertainty as to where this business is going to go, I don't think anybody's going to penalize you because you hired more people. So with that, I just want to move on to, there's some other payroll and tax opportunities under the CARES Act, which were enacted at the same time as the PPP. First of all, this one is very important for people who have substantial payrolls. The employer is allowed to defer any payroll taxes between March 27th and December 31st with no interest or penalties, and they can pay 50% of that in December of 2021 and the remaining 50% in December of 2022. So that means that the employer's share of FICA, Social Security tax, and federal unemployment, that is available to, that those taxes can be deferred. If you're self-employed, you can defer your self-employment taxes and pay them back. Now, what it says is that any applicant who receives loan forgiveness, at that point in time, the deferral of any amounts that you owe after that point are no longer deferrable. So right now, anybody who applied for or even received a grant, a loan, is eligible to defer the taxes that they're incurring. So make sure you speak with your payroll providers and let them know, if you haven't already, that you want to defer those taxes. If once the loan is forgiven, which is probably not going to take place before June 30th, any payroll taxes after that point are no longer deferrable, but the ones that were deferred, you can repay under the terms of the loan. There's also an employee retention credit as an alternative to the PPP loan if for some reason you don't think you're going to qualify, or you just don't have the, for whatever reason, let's say your employees, decided that they're doing better on unemployment than they would coming back or whatever. I think that, there's an alternative, but you can't apply for both. Basically, the employee retention credit gives you a refundable credit of up to $5,000 per employee who's paid at least $10,000. So it's 50% of what they're paid, and they can per quarter, and so they can per calendar quarter. So you can get a credit on that amount, and if it exceeds your payroll taxes, you can actually get the money refunded to you and used for other means.
So Ben, I'm going to jump in here. In this particular area, I think it'd be a good idea that you have a payroll provider such as Paychex, ADP, and others that will be able to help you do the calculations, or go to your HR department, payroll tax department, if your company is larger, to go over this, because it's not relatively simple, but it is available to everybody.
And it's available. You have to have an average of 100 or fewer full-time employees. So it's really for very small businesses, and the employees have to have been furloughed. So what it's doing is they're saying, you don't have the wherewithal to apply for the loan for whatever reason. You might get a better result with this, but I'm not going to get into more detail on that. I want to discuss also non-payroll income tax benefits under the Act. Basically, these are key ones that came out of the Act. First of all, as of 2018, when they lowered the corporate rates as well as the individual rates, they limited the amount of interest that's deductible to 30% of taxable EBITDA. So companies that were incurring a loss in taxable earnings before interest, depreciation, taxes, and amortization, they weren't eligible to deduct the interest. The interest is available on a carry forward basis. So now they've increased that rate for 2019 and 2020 to 50%. So you'll be able to deduct more interest potentially. They've also opened up NOL carry forwards. In 2018, again, when they lowered the rates, they said you can't carry those back to recover taxes, income taxes that you paid in prior years. Well, now, it used to be a 2-year carryback, because they're expecting large economic losses and true suffering by companies. They're saying that you can carry those losses back for 5 years, back to 2018. You can carry it back to 2013 and forward. You can also elect not to carry it back if you so choose. So it's not mandatory, but it's a potential benefit to companies. And then with respect to individuals, either partners, S shareholders, or sole proprietors, there was a rule that said, starting in 2018, you can only deduct up to $500,000 of those losses, married couples, and $250,000 all others. So you were limited in terms of how much you could deduct in that year, and the rest was available as a net operating loss carry forward without limitation in the following year. So that impacted people who had significant investment income. In the year that they had a business loss, they couldn't offset the investment income by more than $250,000 or $500,000 in the year. So they changed that retroactively to 2018. So any individual who had a business loss that was limited last year can now go back and amend their return, get a refund of any taxes paid, and if it created a net operating loss on top of that, they can carry that back to 2013 and forward.
So in short, there's going to be a lot of work for accountants concerning this. We could spend probably about 2 hours just going over the minimals, but I think the next slide is the most important one, Ben.
So
there we go.
Here we go. The consequences, and the pitchfork is the devil's pitchfork, and the devil is always in the details. First of all, you have to certify that you have an economic need for this loan. You have to certify in good faith that you're applying for it, that your business has suffered economic uncertainty, and that you have a need for the money. You're not taking it to expand your capital requirements or grow your business, that either you had a drop in revenue, or you expect a drop in revenue, or you're not sure, but there's an uncertainty as to whether you can fund your payrolls.
So in short, what we discussed earlier is that this is a good time to think about economic certainty. You have to clip a newspaper article to add to the file about your industry, et cetera, but let's get to that next slide, which is, I think, everyone's real concern.
Certification. So you need to, current economic uncertainty makes the loan necessary to support your ongoing operations. The funds will be used to retain workers and maintain payroll, or pay the qualifying expenses during the period, the 8-week period. You're not receiving any other loans under this program. You could have received, an emergency emergency income disaster loan, economic income disaster loan, or economic injury disaster loan under the first Coronavirus Act, and you can add that to this loan and repay. You can add it, and it's subject to the same terms as the PPP loan, up to the $10 million figure. So, but you can't apply for two of these loans. You have not and will not receive another loan under this program, and you will provide the lender documentation support showing how you use the funds and your need for the funds, and supporting that you calculated your loan correctly. Okay. So
next slide. Go to the next slide, Ben. The penalties.
Penalties. Okay.
There we go.
So if you use the funds for the unauthorized purposes, the SBA will require you to repay these amounts, and if you intentionally or deliberately misled them, the SBA will have recourse against the shareholder or the member or the partner for the unauthorized use. So while the loan is guaranteed by the SBA, you're not off the hook if you misapplied the funds or didn't use them for the purposes you claimed. So the penalties can be quite severe. They can be criminal, and fines of up to $250,000, imprisonment of not more than 2 years. And if it was if you submitted to a federally insured institution, you can spend 30 years and up to $1 million, pay out up to $1 million. Now, most people applying for these loans, I wouldn't say that they're subject to it, but I think that, just the other day, the Treasury Secretary Mnuchin said, we're going to audit any companies that receive more than $2 million from these PPP loans, because there's a lot of outcry from smaller businesses that the funds were misdirected. So if you're getting over $2 million, I'd say that that's a threshold where, it's not a safe harbor if you're under 2 million, but if you're over 2 million, you better be sure that you keep very accurate records as to where this money is applied and how you came up with the need for the money of $2 million.
Okay.
So one other thing that came out the other day is, if you think that you applied and you got the money and you're having second thoughts, you have until May 7th to repay the funds. So with that, I want to open it up to questions, and I thank you for your listening to us at great length.
Thank you, Ben and John, for a very informative little presentation. I do just want to open it up the last 5 minutes to questions. Just a couple notes. We have a lot of questions, so I want to ensure the attendees that they will receive the slides on the recording if they want to play it back, and also you have the contact information up here on the screen. But with that, I have a couple questions I singled out that I think could be helpful for the entire audience. The first one is, my bank told me that I had to apply for loan forgiveness directly to SBA and not through my bank. Can you confirm or advise?
I'm going to jump in. The SBA does not do loans. All they do is guarantee them. So the paperwork would have to go through a qualified lending institution. If you have people like Cabbage, they are actually the front, what we call fintech companies. They're the front of another bank. In particular cases, it's sometimes a state-chartered bank, but a bank is the actual authorized borrower, and they in turn remit the funds to the individual. The SBA does not lend directly.
And just to follow up on something that you touched on, but I think it would be very important to reiterate for everyone. Here, can a U.S. subsidiary that employs less than 500 people benefit from a PPPL if its French parent company employs 2,000 people in France?
Yes. I think that they're only looking at the U.S. operations. As we said, France has its own, standards for how to support the French companies. They're not presumably, providing any unemployment or any subsidies for the U.S. subsidiary. So if the U.S. subsidiary qualifies, the answer is yes.
Okay.
Right, but also I'm going to jump in is that you have to think about the statement, I think on slide 13, which basically says on eligibility, it is the majority of the businesses in the U.S. So they may have more employees in France, but the question is really about revenue, what they're doing here, et cetera, et cetera.
Okay. And a bit more detailed, is repair and maintenance of office equipment included in the requirements that you mentioned, or in the allowances that you mentioned?
As far as I know, no, because repair and maintenance is typically not a fixed expense of the business, and they're looking to help subsidize up to 25% of the amounts can be used against your fixed needs, like your rent and your utilities and your ongoing expenses, which may have been interrupted by virtue of the shutdown. So that's where they're focused. If you have a water main break, I'm sorry, you're going to have to come up with funds. You would have had to come up with them anyway under normal circumstance.
Okay. Now, if you made 100K but had max investment in 2019, then the loan is very, very small, perhaps only 6,000, which is hard to keep your business running for the next 4 months. Can you at least apply for 600 benefit until July 31st to help?
Could you repeat the question again?
Sure. If you made 100K but had max investment in 2019, then the loan is very, very small, perhaps only 6,000, which is hard to keep your business running over the next 4 months. Can you at least apply for $600 benefit until July 31st to help yourself?
You mean if you're an employee of your own entity, and the question is not to what do you call it? You're applying for unemployment because you'll get more money that way than going for the PPP. If you're going for the PPP, you have to rehire yourself, so you can't, play one against the other.
Okay.
But I think the answer is if you're a sole proprietor, you have no employees, $100,000 translates into $20,833. It doesn't translate into 6,000 because you divide 100,000 divided by 12 times 2.5 is 20,833.
Okay. Well, we are just out of time, but I did want to just mention once more that these slides and recordings will be available to the attendees, and we have the contact information here. I did want to avoid any specific questions as far as specific circumstance, but if you have any particular interest in contacting both Ben and John, they've generously provided their contact information for you all. Just a note for FACC members and the like, we have another webinar coming up next Thursday on the 7th, focusing entirely on employment law and employment benefits as it relates to the COVID-19 crisis. So I expect to see you all there. But I would just like to thank Ben and John once more. And I would also like to thank you, the attendees, for coming and participating and asking a ton of questions. I apologize for not being able to get through all of them. But we will look forward to seeing you soon. And Ben, John, thank you once more. Really appreciate your time.
We thank you for the opportunity to be able to give back and to help as many people as possible through this time. And I understand the French Open is still scheduled for the second week of February. Hopefully it will be held.
I hope so too.
Au revoir.
Au revoir. Take care, everyone.
Bonsoir.